fundsupermart.com.
Hi Jim, what is the outlook for the US high yield market over the next 2 to 3 years?
We think high yield is an asset class that clearly has some near-term volatility, perhaps around the fiscal cliff, the global slowdown, the Eurozone crisis, and some of these other risks. But actually over a 2 to 3 year period, we actually feel very comfortable with the asset class. And in fact, investors have a very strong desire now to earn some income with relative safety, and high yield provides that. I think default losses will be very low, continue to remain subdued, as many companies are in excellent health. This has never been a corporate recession. It's about weak government spending, and with corporates well positioned to survive, but also to provide a lot of income. I actually think it's one of our favored asset classes over the next 2 to 3 year period.
What would be the factors driving the performance of US high yield?
Well, and again, I think there's short-term influences and longer-term influences. I think short-term, it is subject to the volatility around risky assets generally, and I mentioned the fiscal cliff, and as well as the Chinese slowdown, the global slowdown, and the Eurozone crisis. But I think overall, what you're looking at, if you look at high yield, is default rates, default losses, and can the economy grow at a pace that actually precludes real credit problems from surfacing. And it only takes slow growth. It doesn't take fast growth for high yield companies to survive. And so I think absent a severe recession, which is what I'd be thinking is the big longer term risk. And we see the odds of that as quite low. And therefore I think with the economy just holding up, defaults will stay low, and the income will provide a very nice cushion for investors.
Are there any risks investors should be aware of?
Well, as with many asset classes, liquidity in times of stress can be a question mark. But again, this is not a low quality asset class, and with default staying low, we don't think that will emerge as a key risk. I think what clients need to be aware of when they're buying high yield is that there will be a little bit of near-term volatility around these general phases where risk is in demand, and then when risk is a little bit out of favor because of growth concerns or fear of policy mistakes. So I would just say ride through the near-term volatility and those bumps on the road, and investors will be fine.